So what has been the mood? I mean, there's so much news flow right now, geopolitically and economically and trade-wise. What's really on the minds of your participants?
I would say three things. Trade, for sure, the broader US-China relationship, and third, investing in China. On trade, I think most investors seem to share the idea that some of the concerns that have been raised by both parties are legitimate, but they hope that they will be resolved by mutual dialogue and not by an escalation of tensions. On the broader US-China relationship, people are taking stock of the news and trying to read through that. They think that President Xi and President Trump have a personal good relationship and they respect each other, and they hope that that translates into the broader themes. In terms of China investing and opportunities to invest in China, there was a panel this morning with some global investors discussing about it, and one of them made the point that the allocation, the amount of global assets currently invested in China is minuscule.
Yeah.
So they believe that this is a region that we have, as a country in a region where we have to take stock and reckon with, and that people should invest more.
How about the Trump pulling out of the Iranian nuclear accord?
Yeah.
How disruptive for markets and economies is this going to be? This is not just a bilateral disconnect. This could roil oil markets. It could roil investment flows.
Yeah. So this morning there was a buzz around it among the investors. We discussed with a few of them. Overarching feeling was it's too early to call. Most people were expecting that something like this could have happened. If anything, some investors are pointing out, as you said, that Europe might increase tensions between Europe and the US at this point in time. But in terms of overall disruption to the markets, feeling was it's a bit too early to call.
How about on the trade front? Obviously, on the minds of everybody is the U.S.-China trade dispute. Does that kind of lower the risk appetite among investors? And do you? A second part of that question is about the renminbi. How do you see the renminbi being used possibly as a tool in this trade dispute?
So our view on the RMB is that actually the currency will keep on appreciate moderately from here going into year end. We think that the Chinese government have appetite to let it go towards 625. In the longer term, investors seem to think that the narrowing of the rates differential between China and the US might actually remove some of the leeway that the Chinese government has had so far in fixing the currency. But in the short term, most investors were thinking, no, the currency will probably keep on going, appreciating moderately, and nothing will happen, no selling of US treasuries or things like that.
How do you see Chinese equities holding up through these volatile times? We do have the inclusion of 200 some plus A shares into the MSCI index.
Yeah, so views on China equities is there's volatility is one of the things that we discussed in a panel this morning. Venturing back into volatility, how does it impact investing in this country? Feeling was we are dealing with a global phenomenon that are impacting all the asset classes. In terms of pure China equities, you have some of those names, think about Ping An or Tencent, have had a spectacular rise.
Right.
And we feel that even with volatility, there will be alpha-generating opportunities because of the strong fundamentals and opportunities to buy. So we remain positive on our outlook for China equities.
Yeah, and for the crowd here, getting more institutional investors in will help develop the market.
It's definitely one of the most common comments. The more institutional investors have to deal with China.